Yo, yo, yo. What's up, everybody? Welcome back for the 12th episode of Pure Alpha. How's it going, Axis?
Doing well, man. What's going on,
Yeah,
everybody in the chat? Welcome back
yeah,
in another crazy Sunday in the land of markets. Hope everyone's doing
yeah.
well.
It looks like we already got some speculation on who our surprise guest is. Some people think it's Somi. Think who else do we think? I think
Somi's
it's
an
just,
AI guy, so you're never gonna
yeah.
see his face. No, just kidding. Just kidding. Just kidding.
If
I
he's
don't
an
know.
AI,
Don't know
it
where
shouldn't
that
be
came
too hard
from,
to get him on, right?
right?
we just
We
need to
can
download the
program him to
code.
say whatever we want.
That would be a fun stream with a Somi AI. Oh man. Well, yeah, welcome everybody in the chat.
I
Thanks
actually
for.
haven't seen anyone in here guess who's coming on yet. I've seen some
Yeah,
good
I haven't
guesses, but
either.
yeah. So
It's a
I did
Hanging
tweet
Gardens
it.
thinks
So
it's
if you go check the tweets out there, you might be able to find out who it is. But we're still waiting.
yeah. So our surprise guest hasn't come in quite yet. So we're gonna start the show, talk about what's been going on in the ecosystem, what we've been finding interesting, and then whenever they pop in, we'll pull them up, and I'm sure that they have a lot of content that they want to share. So I'm excited to have them in. But yeah, man, Axis, you've been surviving out there, holding on these treacherous times.
Oh yeah, I'm fine. I think everybody else is not doing too good though. So I'm just like
Mm.
looking around and I'm just like, what the? Yeah, people
Yeah,
falling on the blade all over the place.
right, dude, it's
Yeah,
crazy.
yeah.
Um, yeah,
How you holding up over there?
dude, I'm doing good, man. I'm doing good. I'm hanging in there myself. Just kind of waiting for some action to happen. Enjoying the yield where it's at in the liquidity pools. Enjoying some of the updates that that have been dropping, especially in the Hedron system. I'm going to talk a little bit about that today. But so yeah, it's kind of I feel like we're in a holding pattern, kind of waiting for something to happen.
Yeah, I actually posted a crazy inverted chart today. It was like an updated chart from something that I think I posted the chart June 1st. So I took the Ethereum hex
Hmm.
chart, and then I flipped it upside down. And the pattern that it created was this thing called a ascending broadening wedge, and we were on our
Hmm.
way going back up. And so, in other words, the price was going to fall drastically. And so then I went back today and looked now a couple of months later, and it's like it overshot, came back down to retest, and resumed off that level. And now we're making new highs. So that, in other words, there's still more downside to go for EHEX if that pattern were to complete.
Yeah, yeah, that's a crazy. So, and this is something I talked about in the stream I did with Alex when I did the Hedron update. But the liquidity context for Hex has changed completely, right? And so, like when you're understanding what's going on with the chart before and after the fork of Pulse Chain Mainnet, and then when all of the liquidity pools were set up in PulseX V2, understanding how the liquidity changed from before and after really helps you understand like why the price charts are like doing pretty bad in our case, because now Hex is more tied to Pulse, and most of the Hex liquidity is in Pulse, but before it was all USDC based. So we had a more, Alex put it in a good way, we have a really solid base. When we had a really solid base when our main pairing was against USDC, but now that it's against Pulse, it's a little bit more like Jello. It's a little bit more fluid in that not only when do hex cells affect the hex price going down, but it's the ratio of hex to pulse that's providing the USD value. So any cells on pulse now is affecting the hex chart as well. And patterns like you just described are reflecting that change in liquidity where we're hitting these new lows that we never thought were possible previously. And now all of a sudden we're at these lows again, and yet we're seeing more downside possible.
Yeah, I mean, there's no guarantees. Like, I think a one more 50% flush lower on Pulse would be a good and welcome thing
Mhm.
in terms of like just to complete the technical setups. Because really, from my knowledge and understanding, my sources, like that explosive recovery, that automatic rally that happened on the Pulse chart, it actually came in from like a couple big players, and one of them was the OKEX exchange, who
Mhm.
came in and brought in the total volume was like $50 million of volume in like 2 4-hour candles. So in
Mhm.
one day there was $50 million injected into the Pulse ecosystem,
Mhm.
And that's not enough to sustain the rally. So I think it's possible that Pulse drops another 50%. Right now, it looks like it's kind of going sideways and trying to recover, but there's going to need to be some sort of ignition switch that needs to get hit, and I'm not seeing it right now.
Mm-hmm.
Especially because when I'm zooming out and looking at other factors that's going on in the space between like the dollar, what the dollar index is doing, and then you look at
Want me to pull up a chart?
um
Oh, yeah. Let me see.
yeah, I
Hold on.
suppose we can give them a visual. Now again, I did go through like a deep look at this stuff the other day on with RH Max. So I'm going to briefly cover it now because you can go back and see basically all this analysis again. And then hopefully we'll be able to go through this again here in a little bit when Kareem comes on. But I mean, the short answer is like we're at a key inflection point on the dollar now, where
Mm-hmm.
it can break out, retest, resume, and that's really bad for risk. So risk goes off when dollar increases in value. And this is all coming in the face of a meeting with the BRICS nations. Because they're if you haven't heard, they're trying to create their own currency to compete with other fiat currencies. And you hear rumors of it being backed by gold, and that would kind of explain why we've seen all this buying on gold over the last couple of years here, where this was a huge accumulation range and then a run up, and then like the bull flag, another massive accumulation. So central banks have been like basically dropping U.S. sovereign debt, and people that kind of don't like the control structure of the West, they've been abandoning that and trying to start their own thing. And it looks like that's starting to show up here on this gold chart. For example, this angle of this sell-off is not as steep as this angle of this sell-off so far, which means that over the next 5 to 10 years, gold is going to continue and resume up and potentially go on a run for like another $1,000 run higher. But in the meantime, stagflation is the game, and short term people will sell the stock market and they'll come back into like U.S. dollars in the short term, and so then that means that people aren't going to want crypto either, as that's a tremendously risky asset class.
Mm-hmm.
I just saw this tweet before I pulled up the stream, and it was basically that Circle, which is the guys that has the reserves that backs USDC, just lost $195 million in market cap. And so this guy's saying that real money is leaving cryptocurrency, at least in the USDC asset. Now we could look at other things like the USDT or BUSD or any other form of stablecoin and kind of die and just see kind of where the stuff sitting at. But last week, we had Bitcoin crash pretty hard. It came down a significant amount. I think it was like, what is it here percent wise? 14%. And then this is a weekly candle. So it's kind of setting up for a more treacherous end of the year, a lot like 2019 here, where you're going to have this potential, sideways accumulation pattern. And it can go as far as to test the lows. But during this period of time, it's probably not going to be straight up for Pulse. Obviously, it's at best case what you can expect for Pulse is some sideways action. These lows get protected, we get rejected, and then we get a squeeze and then break out here. Potentially, this is actually not too long from now. This is going out to October. But when you take a deeper look at the macro and you look at things like what's going on in the stock market, especially when you measure it against things like the money supply, like you get a totally different perspective of what the play is right now for the macro and why risk is going off and what the end goal is here. This is just a bunch of the stock indices combined together. And so I combined the S&P 500, the NASDAQ, the Dow Jones, and the Russell together to give you a picture. And this is a clear technical head and shoulders pattern, and this is on a weekly. So you got the head that's already formed, and now price can chop here for like up to 4 weeks, create this other shoulder, and do a breakdown move. And this is kind of what your Michael Burrys and your other short guys that like to play short are like calling for. Like the Contrarian was one of the guys that I stream with privately mostly, but sometimes publicly. For those of you that know, he's been short this whole year, so he's been wrong. He's historically known for being too early. So this guy, he was wrong in this period, whereas I was like more bullish. But now he's going to be right because this is where the time to go short is after this protective measure and like reaccumulation, run up, and then sell the top. So when you compare, this is just regular dollar valuation of these stock indices. But when you start to do like, let's say SPX over M2, which is the money stock, this is a totally different story. So like, just draw a line, and you can see here. What do you see? Resistance here at this level. The number doesn't matter. It's just tap number 1, tap number 2, tap number 3 with a harsh rejection. It's the same play that keeps getting played out. So at the very best scenario, you're looking at if this horizontal or this diagonal trend line is protected, you're still looking at like quite a long recovery time. And guess what the time frame is? This is 25 and this is 26. So like you're looking at the bull run resuming end of next year into 25, and then 26 is going to probably be your continuation pattern with a blow off middle end of 26. I'll toot my horn a little bit here. Like I'm probably one of the only guys that's been saying 26 consecutively now for a while, like a year now. I've like been saying 26, so we'll see if it plays out, but it'll be cool to see. Short term, it doesn't look that good. There's a counter argument here that potentially like all this stuff, these warning signs will it's all just a fake out, and what you get is Bitcoin actually blows off early. And so like that's kind of like the big question mark is Bitcoin going to like surprise everybody, not go through these like 9 to 10 months of shit action and just like basically totally reverse here and then just top out at like 40 or 50K early next year, and then that's like wave 1 of the whole cycle, and then we're waiting for a year and a half for recovery. Is this like some sort of a front run event on the halving, or is this going to be like a typical cycle where we just get the boring ass shit and then the build up into and then we get an actual parabolic bull market move. So I'm more looking at like all these other outside factors because Pulse on its own can't do shit. That's just the reality of it. It's very reliant now, and it's been clear for years that it's reliant on the overall success of crypto as a market as a whole. No one man can put enough money in something like this to satisfy all debts. So we're just gonna have to wait for the bull market to continue, both in the stocks and in the cryptocurrency space.
Yeah, that's the gist that I've been getting to overall. It's we're just waiting for the money to trickle down into our ecosystem. But in order for that to happen, we have to get it to, we got to get the whole macro on our side first to make people comfortable speculating on the higher risk side of the high risk asset class.
Yeah, I'm just reading you guys' comments here. I'm happy to hear. What do you guys want to talk about today? We can go on about I was curious to hear about a little bit about like what you thought of like Alex's planned updates for icosahedron, just like because we haven't actually really talked since that update came out. I was wondering like kind of what your take was on it, just like a quick TLDR.
Yeah, so I like what he's doing. The general overview of like the goal of what he's trying to do with his upgrades is to unify the assets between Ethereum and Pulse Chain. And so he's creating a brand new contract that unifies the previously separate ICOSA and Hedron contract to a new one that's just icosahedron. And what you're going to do is transmute your liquid coins into the new contract and your liquid stakes into the new contract, and you'll get brand new tokens and brand new stakes from that. And what you'll be able to do is essentially take your new eHicosa and eHedron, and you'll be able to stake it over on the Pulse Chain side in addition to the Pulse Chain assets. And you can take your Pulse Chain assets, bridge them over to the Ethereum side, and stake them over there. There's also some upgrades with the HSIs. So they're called HMIs, hex mining instances now. They're automatically tokenized, which is one main thing. They can call arbitrary functions. So any future airdrops, like before HSIs couldn't get like the communist airdrop because of the way the HSIs were coded, but the new HMI ones are able to get any airdrop that's given to hex stakes in the future. You can do multi-sigs with the HMIs, and yeah, like I said, that they are already in token form, which is pretty cool. There's some updates to the auction house mechanics and rules, some things to mitigate against bot attacks. But also a big thing is you can bid with both ehedron and phedron on either side, on either chain. So for example, if you got a big stake coming due on Pulse chain, well, you can use Hedron on Ethereum to bid on that stake on Pulse chain. So use ehedron to bid on P hex. And the interesting thing about the mechanics there, and this is where I think a lot of the game theory changes, is the bids are still only calculated in the absolute value of tokens, not the price of the token. So say, for example, ehedron is half of the price of phedron, but somebody bid 100 million phedron. Well, you could bid 100 million and one ehedron and outbid the person with 100 million phedron, even though the dollar value of that ehedron is less. So the incentives
That's
change.
interesting.
Yeah, the incentives change where the one that you want to actually bid with is the one that's priced lower, because you can essentially get more quote unquote bang for your buck by outbidding the people who are using the more expensive one. It diverts the incentives. It diverts buy pressure to the less valuable one to make them a little bit more equal, assuming that there's significant volume in the liquidation option. So like if ehedron is a lot less, then that's the one that most people are going to bid with because it's so much cheaper to hit that to outbid the next person.
This is going to totally change the pricing dynamic, and it actually might make Hedron and Icosa more. You'll start thinking about the pricing more in the coin terms versus like the dollar terms. The dollar exactly. Prices becomes kind of like this flexible environment.
Yep.
So yeah, that's actually. I'm actually very optimistic about that. I mean, I read through it the other day. I was on a drive. But because I didn't have Sloth there to break it all down for me, I didn't know. I missed that part. But that totally, it's good that Alex recognizes and addressed the fact that having two assets with different markets is a problem. I like that. Because he's trying to consolidate and create unification, which that's what synergy is all about, So it's he's aptly named. So I'm excited to see where that goes. That's going to be really cool to see. Crypto Stylist had a comment here about what chain do you think is going to get all the action. I mean, I think all the trading is going to happen on Pulse. I think that's been proven by like the liquidity being siphoned off the ETH side. Now that doesn't mean like let's say Hex on Ethereum has no value. It's just that it's being traded majorly on Pulse chain now.
Yeah. She also had a good comment that this might drive the price of ehedron up, and that's absolutely true. But also, if you take it to like its logical conclusion, this change in the Hedron and Icosa contract has the potential to lift both hex prices up or lift ehex's price up even more. I think we've seen that the market generally is not valuing the Ethereum version of hex as much as the Pulse version of hex. But the way that some of these mechanics are outlined in the updated Icosa Hedron contract, it's possible for the value that's going to be shifted into Hedron because you're able to get P hex from it. That dynamic shift may actually confer value into eHex long term. And this is mostly with the ceiling price and stuff. So the big caveat here is that the magnitude of economic energy going into ehedron because of this new redeeming mechanic needs to be large enough to hit the ceiling price, exceed it, and create a arbitrage opportunity through staking eHex 5555. But now, and this has been my whole speculation on Hedron in the first place, is like the reason why I like the system so much and I buy into it, not because it creates the arbitrage opportunity today, but it creates the mechanics for an arbitrage opportunity to create a price positive feedback loop with Hex possible. And that's why I liked this system so much and speculated on it, because it's a new smart contract that creates a potential for that positive feedback loop to occur. Does that make sense?
Yeah. I was just thinking while you were talking, kind of like what could happen now where like the prices of your hedrons in dollar terms kind of could oscillate and kind of neutralize somewhere in the middle. So
yep.
if ehedron's the lower bound and phedron's the upper bound and their dollar term valuations, that through this protocol it'll actually make the price unified once more.
Mm-hmm. Yeah.
And then that would make, like you were saying, your next level thinking was like, okay, so then the value ends back in hex, right? Because it creates a more stable underlying substrate layer. I don't know another way to say it simply, but
Yeah. Oh, this is a good question from Shock of Eyes. Maybe I misunderstood, but I thought you were going to convert all your P or He Hedron to a totally. That is true. You're converting these tokens to new tokens, but the new token is still P Hedron or E Hedron. So a new contract being created with a new contract address, and the tickers, or I don't want to say what the tickers will be, but there will still be two assets. There will be an asset that's native on Ethereum and an asset that's native on Pulse Chain. So your E Hedron will be created into a new E Hedron on a new contract. Your P Hedron will be created into a new P Hedron native to Pulse Chain with a new contract address. So there'll still be two assets. It's not like you're merging the two into one. There's still going to be two. But you're losing the old contract stuff. It'll still exist. It just, quote unquote, won't be supported by the community. But there's still assets you can speculate on based on if there's liquidity. And all your stakes will still be able to mint the old V1 Hedron and sell it to the HSI buyback like normal. You can't change a smart contract. Yeah, exactly. There will still be 4 tokens. So yeah, overall, like I'm actually really excited about it. And if you look at the very beginning of that big long text that he wrote in the Hedron and Icosa Telegram chats, he says it's time I share phase 1 of what I'm working on. So he has more phases in store, and he has more things that he's been building. And Alex's MO has kind of been, he doesn't really talk about things unless it's almost pretty much there, ready to launch. So he has a lot more things cooking in the background, at least if we read into that one sentence. So I'm really excited about that. Testnet is estimated to be for Q4, which means the estimated release is about probably Q1 of 2024. That's the timeline we're on right now.
So, the price didn't really react too much to that news. And that's probably a good thing, because it means people aren't really looking at it, which is like supreme opportunity. So people stop looking at the chart. Can't go down anymore either, right? Just like the chart can't go up that much, it can't go down that much either. So
the chart can't hurt us anymore, buddy.
Pretty much. I mean, if you're still here, like you're fine. You're gonna do just fine. Like, especially, I hope everyone didn't spend all their money yet. I mean, it's hard to continue to bring in consecutively over these periods of time. So it's good to have your own investment strategy, and like, a lot, there's like different types of users in different camps. Some people like to sell local tops and then use that money to buy back the dip. Some people just always DCA. Some people, have a staking ladder and they haven't bought Hex in a long time, or any asset. Some people sacked and then took profit at the top. Some people continue to just like DCA in over time that way too on the new Pulse stuff. Like, everyone's got a different strategy. There's not just one way to handle this, and that's like one thing that we talk about in that LP course we did, was like how many different ways there is to view your crypto holdings. I don't want to give it. Yeah.
Yeah, go ahead. I'll talk about this.
Less than 10K liquidity. Is that on Hedron?
Yeah, the chart that you just had, that you have up, it says on the
this is just Hedron on V1 on PulseX, and this is another thing that's like deceiving. It's like, you're seeing 9K liquidity here with really only like less than 100 million Pulse backing Hedron, but this is just a V1 pool, you guys. So like, if I go find Hedron against Rat Pulse on V2, I'm sure that one's got a little more liquidity. So yeah, this one's got another 10K.
Most of the Hedron liquidity is actually in the Fux pools. That's where most of it has gone to, because you can pair more of the assets together. So the eHedron actually is lacking a lot of liquidity because it's only 10% of that Alex Hedron maxi pool. But the vast majority of the trading for Hedron assets is going on in the Fux pools. So I'm looking at it right now. P Hedron has $300,000 worth of P Hedron liquidity in those pools. It looks like there's about 384 billion eHedron in that pool, and there's 234,000 eICOSA in that pool. The Ethereum assets are definitely lower liquidity than the Pulse Chain assets for sure. But that's where you're going to want to do, if you're trading Hedron, most of it you're going to want to do V2 PulseX or PHUX.
Okay, and then the other thing is like, yeah, there's these like limitations on liquidity sitting in these pools, and then if you're not using like an aggregator,
Mm-hmm.
then you're really going to get smacked more with slippage. But assuming you use like an aggregator, like Pitius, I'm just using that because that's the one that comes to mind.
Mm-hmm.
Pitius, let's see here. Let's see what they give us for Hedron. I don't know what's a good amount of billion.
Yeah.
1, 2, 3, 1, 2, 3, one more zero.
One
Okay.
more.
So like this is going to give you the best route across. I think that it taps the PHUX pools as well
Yeah.
as the PulseX pools. So this is going to, you know, in a second here, this is going to load in the slippage amount, and you should get a better price impact minus 1.11%. So it's really not that bad.
Mm-hmm.
Yeah, compared to like if you were going to do the same buy on a pool with 10, it's probably a little worse on PulseX. I'm not going to take the time to go do it, but
Yeah.
so
Show
make
the
sure
route
you.
really quickly. I'm curious where it's going through. Is there a
Yeah.
button? Yeah.
So we got 57% of it's going through Hedron Pulse, and in that it's tapping 2 of the PHUX pools and 1 of the in the PulseX V2 pool, and then another 15% is going through PulseX V2 and V1 on Hedron Hex. So you can see that this order is routing through 1, 2, 3, 4, 5, 6, 7, 8 different pairs,
Mm-hmm.
which is pretty cool to see. And so this thing's doing its best to give you the best order execution. So it's gonna,
Mm-hmm.
if you hit the buy button or sell button, it's gonna attack at once on all these different pairs on all these different pools.
Yeah.
So I mean, the
Shout out
liquidity
to
isn't what it seems, I guess. Yeah.
yeah. But yeah, shout out to teams like the Pitius team who are creating these DEX aggregators to allow us to have better order execution on Pulse Chain. You know, for anybody who doesn't know, this is basically like a matcha or a 1 inch, but it's native to Pulse Chain and hits the Pulse Chain liquidity pools, which is pretty sweet.
Yeah.
Yeah. But yeah, that's the update on the Alex Hedron stuff. There isn't too much else besides what you read on the Telegram. And then once the test net comes out, I'll do a whole review on like how to do everything and what other details we get, because I think there's still some details on the contract we haven't gotten yet.
Someone said they wanted a hex prediction, or not a prediction, a projection of where this thing's going to go with this bull market.
Mm-hmm.
And I replied that I think it's so until we get this rally, like so until these new lows were hit, like that rally there was all like that was setting the table in terms of where the price could go. But because we got new lows here, it totally changes the trajectory. And it makes sense too, right? Because you just doubled the supply in one day. So that's where all this action comes from. You doubled the supply of hex, but you also forced value from this chart to go into like Pulse, PulseX, Inc., sacrifice phase number 1, sacrifice phase number 2, sacrifice phase number 5,555. So all this money it was diluted and redistributed, or the value. So when this thing finally bottoms out after that whole period, you know, who knows if it's down here? And I'm just kidding.
And negative numbers. People are paying people to take their hex off their hands.
Bitcoin did that once. Bitcoin ran up to like $30 and then crashed back to a penny on a flash crash on the MTGOX exchange. So it's happened before where, you know, Ethereum's also flash crashed to sub-dollar before from like hundreds of dollars. It was on the way up in 2017. So we've seen assets flash crash. You know, if someone put a big enough order through on EHEX pair right now on USDC and ETH on the ETH side, it could flash crash it down. Someone would step in and buy it. The real value isn't what you're going to get from the chart. But anyway, I'm detracting. So to get back to like this price projection, you know, let's see. In the past, I've used Fibonacci extensions to kind of give us an estimate. It's like from this all-time low to that high to that next low. So this major This was like a major move back in the early days of Hex. I know it looks small and like insignificant, but that was all the data we had was this low and then this new high and then this new major low with a giant wick. And that kind of set up this next leg. So like then you would say that this was the first move that you could measure an extension from. And it did get up to the 2618 here on this. So let me just double check and make sure that this is just fib extensions. Yeah, it is. Okay, cool. So it hit the 2618 here. And I think the next time we could measure an extension would be like before big payday at those lows up to big payday and then the drop after that. And then that had us get into the 2618 again. So it did it twice in one cycle where it did the 2618. So if we can say that Hex can do the 2618, and it's done it twice before, what does it look like if we did it again? Well, you're basically back down at these levels again. So, a repeat is possible. Just looking at the chart, not knowing like where the buy pressure is going to come from, where's the adoption, how does it look like when you're comparing it against all these other assets that you could also buy at the same time, and how does that dilute the buy power? None of that, taking all that out, just what it from a technical level, based on what the chart's done in the past, like what could it do? Mm-hmm. So there's like in order to accurately get this number, this chart has to bottom. Like, and we haven't done that yet, and you don't know when something's bottomed until it's behind you. So because I don't have like a time, like where it bottomed at, I can't know. So I have to estimate. So this is already like almost not worth doing, but I'm just going to do it because you asked. So there's a lot of guesswork that goes into this. So let's make some assumptions. Let's be conservative and say that, maybe 002 is the bottom. Like basically we go back and we come down here and we test, down here. Well, why am I saying that we're going to go back to big payday levels? Well, because in 2021, let's see, when was this? Oh, this was last year. This was at the beginning of this year on January 8th. I made this tweet. You guys are probably getting sick of seeing it by now, but at this bottom here, I predicted a run up to 10 to 12 cents, and then Pulse Chain would launch, and then the price would correct all the way back down to 0.2 of a cent, roughly. Right now, we're right at 0.4 of a cent. So it's between that. This is basically saying that if you copy what Bitcoin did, then you're looking at like 0.2 of a cent, 0.3 of a cent before like we start to try to recover out of here. Well, Bitcoin supply didn't change at all during this time. So that's one fundamental difference is you didn't double the supply of Bitcoin, right? But in Hex World, you did. You doubled the supply, and you diluted it into other projects. Now, Bitcoin's been getting diluted into other projects since Ethereum came out because all that Bitcoin money flowed out into shitcoins and altcoins and everything else. So you could say that the same thing is true of Bitcoin, and Bitcoin was still also able to recover back to new all-time highs. So I don't really consider the dilution as much of a factor. If anything, it's actually bullish because all the bad money and bad energy loses its entropy and leaves the asset, so they have no power to dump it if this rally is strong enough. So let's just say, like, based on what I just showed you, let's say 0.2 of a cent the bottom, so that we're going to come down here. It could be wrong. We could stop here and we could just go up. And then let's say this automatic rally gets us back up into like this general range where we tap the 618 before a retracement. Well, then that would basically be like saying we're going to go down and do it. This period of time here, you're going to do a 10x in value, right? And so the time frame I can't say, but let's just say that you get that rally up to the 618 and then a retracement back to the 786. The 2618 still got you at $1.91. So that's just EHEX. That it's possible that if you get to the 2618, you're looking at $1.81, $1.91. Now, Sami's made some good points lately of, because you doubled the supply, and because now the buy pressure split, and because, with any luck, Pulse Chain gets some adoption, and this market is growing, expanding, and maturing, maybe instead of getting to the 2618, Fibonacci harmonic, maybe you only get to the 1618, and like this is kind of more in line with what some of his analysis was saying was like you're looking more at like 20 to 25 cents per EHEX, which from here would be from 2 cents of a cent to 2 cents is a 10x to 20 cents is a 100x. So this move from these lows to 20 cents is a 100x move, and I think a lot of people that buy this bottom, that set the bottom, are happy to take profits between 50x and 100x. So yeah, 10 to 20 cents, create a range, and then we have to see like what it looks like. If at this point hex is 3-to-1 ratio against p hex, then that means p hex is 60 cents up here. You know, or maybe the combined values of the two hexes does hit the 2618 for the third time. You know, and then yeah, one of the hexes is 20 cents and the other one's like $1.60. I don't know. So that's with all that speculation and guesswork in mind. I mean, the targets are still pretty much what you could expect. I think 20 cents on the low end and $2 on the high end, you know, and anywhere in between.
And that brings up a good question. Where was it? So in here from Tom C. Like, do you think Hedron can reach an all-time high? And everything for that question, all of that pretty much depends on things that Axis was just talking about. If Hex is able to recover, and not I'm not even talking Pulse X, Pulse or anything. I'm talking specifically Hex. Hex itself, if it's able to recover and approach all-time highs again and break all-time highs, then Hedron is able to do the same thing. Especially if you consider the fact that Hedron has never existed in a time where Hex was in price discovery or approaching an all-time high before. So all of the data from Hedron is within the bear market in Hex. It's never existed in a bull market on Hex. And if you consider Hedron leverage onto Hex and the big price, what's what I'm looking for, how undervalued Hedron is relative to if you value it in hex terms based on like the formulas that calculate its distribution, then there's a lot more room for Hedron to grow as hex gains strength to express that property of leverage that it has on top of hex. But all of that's dependent kind of on what Axis is just talking about, and that's hex doing these big recovery moves up into like the quarter range, 50-cent range, and even the combined range of $1 plus.
I was hoping maybe you could address Tomas's question or commentary here, because I do tend to agree with him in some ways, but I also felt the same way about the creation of Pulse Chain.
Yeah, so this does, so I'll just read it real quick. Am I the only one that isn't a fan of this new Hedron Icosa system? This really complicates stuff. There is already a divide between eHex and Hex. With the Hedron ecosystem, it will be way worse. So I personally disagree. It does, well, let me put it this way. I don't believe it's going to be worse because Hedron and Icosa have the same divide problem that eHex and pHex has already. Like that just exists, but the fact that there's a fork and that people are debating over the eHex, pHex, which one actually has value. But yes, this does complicate things for us on the front end who are adopting this system and migrating over to it. But for new users who come in, it's actually going to be a lot easier from a UI perspective in using it. So you no longer have to explain as much. Do you need eHedron, pHedron, eIcosa, pIcosa when you're utilizing these tokens on the smart contract? You can use either one of them on either chain without needing to bridge over one or the other. Now, there may be some nuances in terms of like, do you want to get the eHex or the pHex and stake it on Ethereum versus Pulse Chain? But in terms of which coins that you can use or which coins that you should buy to be able to utilize this, that actually becomes a lot easier. So for what I was talking about, where you could use eHedron or pHedron to bid on HSIs, before you have to explain, well, okay, you have to actually buy this specific Hedron on this specific chain and bridge it over, etc. Well, now instead of explaining that, you say, yeah, buy whichever one's cheaper and then bid on it, and then that's all you have to do. So that's one kind of aspect that's already simplified through the unification of this contract. And there are others too, but I think that's probably the biggest one. So I think from a user perspective, it's simplified. From a migration standpoint, for the people migrating over, it does complicate it more. And one of my I say goals or objectives will be to make sure that transition is as seamless as possible, and everybody kind of understands what's going on. But I understand the concern. New stuff, new contracts, it's complicated. Like I get it. I think personally it's a good thing overall, but obviously time will tell for that. But thanks for the question, man. I appreciate the critical question for sure.
Yeah, it just makes me think about just TradeFi and like how complicated that has gotten. It's only gotten more complex, especially if you're a fund manager with the regulatory hoops you got to jump through and managing, all those different levers. It's just, as this stuff marches forward, it probably does get more complex,
Hmm.
depending on your goals, or it could be very simple too. So it's as ambitious as you want to make it.
Yeah. And the way you could spin it, and this is me spinning, is the more complication there is, the more more opportunities there are, right? So the higher barrier to entry to get further down the line of valuation is how I want to say that. The more complication there is to really understand what's going on, in some ways, can create opportunities to get to places first before other people. Yeah, that's what I'm trying to say. So your ability to front run a new network effect, in some ways, the probability of that goes up if there's more complication ahead of that. You can also, the rebuttal to that would then be, well, if it's so complicated that people get in, you're not front running anybody in the first place. That's what the rebuttal would be to
Hmm.
that. But yeah, yeah. That's a whole. That's a
That's why
whole.
this stuff has to get like someone has to come in and create the underpinnings of it and give it
Yeah.
value, like and it's based on the supply and demand dynamic, like because everything's so illiquid right now,
Hmm.
some really brass balled mother effers can get in here and pump the prices of this stuff and then create these floors that are never relinquished ever again. That's what happened to Bitcoin so many times before.
Yep.
I think it's going to take some serious thought and effort and energy, and I think most of the hexagons are like, I think the majority of hexagons have the least amount of power in the system, and the ones that do have a lot of power aren't talking.
Hmm.
I really don't. We did an analysis. I shouldn't say we. Crispy Man put together some data the other day. There's really only like 3,000 wallets that are staking 89%, 90% of the supply.
Hmm.
That means that all future minted coins is in the hands of just maybe like a couple thousand people potentially, or
Hmm.
less if
Yeah.
people have multiple wallets.
If it's 3,000 wallets and you assume on average each person has two, that already cuts it down to 1,500 people right there.
And when you think of it, like, there's two ways to look at that. Some people look at that and think that's bearish because they think
Mhm.
like, these 1,500 people can perpetually dump on the market's head forever and keep it suppressed. And then the other thought is like these 1,500 people can perpetually hold the price up forever and create a market. And I think you're just seeing the
Mhm.
last of the weak sharks, and the indecision around the volatility of this new chain, this new fork, all
Mhm.
kind of like finally finishing out to create a basement floor price so that there we get a trampoline that we can like bounce off of, instead of like,
Yeah.
I think it being more like jello that you just keep getting stuck in and falling farther and farther into.
Yeah. And a 4D Traveler brings up a good point. It's like people are here to make money and improve their lives. If it just becomes about games and complexity, I'd rather play WoW. And that brings up a good point. Like at the base of all of this stuff is, price going up at some point in time, right? Like everything you just said, it's like everything that we talk about, and kind of the summary of what you just said is like, at some point someone needs to come in and defend prices at some level with a significant amount of money. If not, all of this is just, complicated code mechanics on a public ledger, and then there
Hmm.
really is nothing else going on. So yeah, like that's
Totally agree
absolutely
with that.
legit.
It's that all or nothing bet.
Hmm.
And the most work and the most effort gets put in at the bottom, and then
Yep.
you reap the rewards in the bull market.
Yep. The uncertainty that we're seeing now, and that kind of like fear and depression. I wouldn't even say FUD, because FUD has a dismissive kind of tone to it, where it's like an unjustified negative sentiment. But like there is legitimate negative sentiment around the community right now, which is way different than what we were experiencing even in the first half of the bear going down. But the conclusion that I've come to this is like, if there wasn't that real kind of existential threat to the ecosystem, then the opportunity wouldn't actually be there at all,
100%.
right?
You'd still be trading at 10-cent hex or 20-cent hex.
Yeah,
The prices wouldn't be down here if it wasn't existential.
yeah, exactly. So and it's I don't think it's illegitimate for people to one, feel afraid because of that and feel uncertain about that, and not want to participate more and not want to keep putting fresh money in,
Hmm.
because it is that all or nothing bet. Like the chances of your bags going to zero is there. It's non-zero. It's a non-zero probability.
Hmm.
And this is kind of one of the things that I'm going to talk about in the fundamentals course that I'm going to do next weekend. But it's like there's a big power in cash flow in times like these, where you're cash flow and good financial hygiene, where you're able to reliably make those all or nothing bets without having to take a substantial hit to your IRL life. Like, you don't have to sacrifice any kind of like security, your house, grocery bills, utilities, etc. But you're still able to make these highly speculative all or nothing bets in the times where it's most opportune to make them. Because the reason why you invested in Hex on the run up from a penny to 50 cents is because you didn't know if it was going to keep going higher and the train was leaving the station without you. Like, that's a lot of the reason why I'll speak for myself. That's a lot of the reason why I was buying in the 30 to 40 cents range, because in the midst of all that, while in retrospect it's obvious that it was going down at that point, in those moments you didn't know if this thing was going to multi-dollars at the time. It had that possibility. At least we all believed it had that possibility. But now the value proposition changes, where it's your ability to gain a larger percentage of the ecosystem that you never were able to obtain during previous parts of the asset's life cycle.
Yeah, if you want to pull up this chart, you guys, you're going to get a real good idea of what this feels like. No, this was the existential crisis for Bitcoin. And Bitcoin was trading at like $17 here, $20, $25. Or this was like between 17 and $20 here. Okay, so let's say it got up to, anyways, it was trading north of $17, and then in one candle, like 1 millisecond, it dropped down to like, this is negative $1.87 down here. This is $1.89. So it dropped down to like
zero,
nothing, right? And like, so with cryptocurrency, like when we say like it can go to zero, like it literally goes to zero, but it doesn't mean it's dead. It just means that this type of action happened on it. And I think we're seeing our last moment of this type of stuff before, like, this is over and we start to create a base, right?
Yeah.
So like, I'm not saying that we're out yet, and like you expect this to happen. You can't set limit orders on pulse, so you pretty much have to have alerts set so you can capture these if they happen. But on the east side, you could put limit orders in. There's a brick of liquidity on USDC pair on Hex. I think it's around 1/10 of a cent. And so this is going to be your, kind of like your last chance to capture these crazy lows down here. So between 0008 and 001. So we're talking like sub 10th of a cent. There's a grand every bar. So you got, I don't know how much is here.
Is that like 50 bars? 20 bars? How many bars?
I would say there's about 50 bars here. So let's just say there's like 50 grand or 60 grand potentially sitting here at these levels. And then imagine you were here and the price slipped below it for a second, and then you pulled I'm not saying this is how it's going to play out. This guy let him trade in here a little bit and then pulled the liquidity. And so you came out with 50 grand here. I mean, you're looking at $500,000 and back at a penny. So back up here where there's all this liquidity in Hex. It's definitely on someone's mind, and it's, let's just say it's been on people's minds for a while now. Yeah. And anybody that's in the private groups, they've known that a lot of this has been a possibility. Shit, you can even go back to some of our past Pure Alpha videos and see where we were calling for sub penny prices, and at the time it seemed almost crazy that we'd hit 0.4, 0.5 cent. But there was liquidity down there before, and it just seems that we keep slipping further and further. There's no one trading it, so like you can't even see the price bar in here because it's down here in no man's land. Here it is, guys. This little red thing.
There's nothing there, literally. The 240.
This is literally 30 cents sitting here where we're at. If you put 30 cents in, you're gonna bring the price up like a tick. So, I don't know. I'm just saying that this is a possibility. So get your limit orders in.
This is a good point from Koshin. What's our opinion on the Bank X situation? eHex is held hostage and wants to be exit liquidity for these bad actors. So the reality of it is that eHex has access to all of the liquidity on Pulse Chain too. So technically everybody is held hostage by them holding a large amount of eHex. So when they sell eHex, obviously the eHex price is the thing that goes down first. But when you look at the routing, if they're selling it on Ethereum, this doesn't happen. But if they're selling it on Pulse Chain, where most of the liquidity is, which I assume that they would, because that's where they're going to get the most bang for their buck. They're pulling out the DAI, USDC, USDT, ETH. They're pulling that out from the pairings relative to Pulse, because that's where all of that value is stored in the farms Pulse Chain, in the Pulse X's, in the farms on Pulse X. Those are where all of the value tokens are sitting, and they're all paired against Pulse. And eHex's largest pairing right now is also against Pulse as well. Actually, it might be pHex, but pHex's largest pairing is against Pulse. So it'll go eHex, trade into pHex, or straight into Pulse, and then they'll grab the tokens that they want. So when they're selling, they're pulling liquidity from the entire Pulse chain system, not just holding down eHex.
Yeah, if they were to, so they're holding, like, rough estimate, a little over $3 million of eHex right now.
Mm-hmm.
If they wanted to market dump it all at once, they wouldn't get 3 million. They'd get a little less.
Yeah.
But there's 91 million over here on Pulse, so that it's just a little. We've lost 400 million through the bridge, guys. Like 3 million ain't gonna do shit.
Mm-hmm.
Like if I pull up the Dune Analytics page, like I did the other night on RH Max's stream, you can see like what the cumulative inflows and outflows of the bridge are. It's pretty crazy when you look at it. So we've seen $610 million come into Pulse Chain, and we've seen 406. Let's see, just make sure I'm saying the 463 million leave. So what's the net?
Say it again. 600.
610 minus. It's 610 minus 463.
Where's my 610 minus 4?
It's like 150 million.
147. Yeah.
Yeah. So the net is that there's 150 million dollars of value still on Pulse Chain, and then if you look at the breakdown here on the bridge stats here at GoPulse, based on just these ones, not based on everything, but just based on these ones, it's given us a number of like $91 million is sitting on the bridge. That's interesting, right? So then I don't know if you guys understand like where's the other 60 million? Well, it's in all the other assets, like in the valuations of Pulse, PulseX, and everything else.
Yep.
But somewhere in between, right? Somewhere between 90 and 147. That's kind of what you're looking at in terms of like value still on the chain. But $3 million, not that big of a deal. If they wanted to get rid of it tomorrow, I mean, we could take the hit easy on the Pulse Chain side.
And this is a really good kind of framing way to frame it. And I got this from Randy Hilarski. That's what he says, I believe, Randy. But during the adoption amplifier, 500 million came out every single day. Right. So the BankX people have about a day and a half of coins that were coming out during the adoption amplifier time. So the market has absorbed this level of supply before. I'm personally not as worried about it. But it is something to look out for sure.
I think another framing we can use is that I'm pulling this off the top of my head. I think Crispy's analysis said that there was roughly 18 million liquid hex user supply on ETH. So they do hold, relative to that number, if it's 18 million, and they have 780 million, and they're 16 billion. What percent is that of the total user liquid supply?
Say the numbers again.
It's 780 million is what they have roughly, and there's 18 billion liquid user supply. So I think that's a little less than 5%. I think we're looking at like 4.3% of the liquid user supply is in the hands of BankX right now. So. It basically, the way the math works out is if they unloaded at a clip of 7% per month, they'd be out within 16 months.
And I'm interested to see what they do with those coins because everybody has just assumed that they're gonna just sell and dump them all, which I don't think is a bad assumption at all, but it is an assumption in the first place. And we haven't really seen too much dumping from them. I mean, we've definitely seen a solid amount, but they haven't been just dumping hundreds of millions at a time. So it'll be interesting to see if they have a significant supply as prices start trending up in a couple months, hopefully. It's like trending up to like we hit that massive like 0.002 of a cent, yeah, 20% of a cent range, and then bounce back up and run to like 10 cents. It'll be interesting to see during that run up if they increase their sellings because of the increased exit liquidity, or if for some reason they hold because they want to capture more price appreciation. I'm just interested to see what they actually do. Not saying that I know.
I think the way that I figured it was like, assuming they're not going to dump it all at once, they're going to dump it as the price appreciates. They might end up taking out between 5 and 8 million on the way back to like 3 to 5 cents. But still, that's the amount of money that's going to pour in is going to be in the like hundreds of millions of dollars that's going to be pumping the Pulse ecosystem while that's going on. So I'm really not too concerned.
Yeah,
I'd be more concerned if they were starting to like, imagine if they started degenning away on things with that supply.
And that really quickly brings up one of the other kind of, I guess I'll say, theses or hypotheses on crypto as a whole. One of the benefits of Pulse Chain is that it's created a sandbox for us to create all these different dApps, but specifically for what I'm talking about now, liquidity pools. And with the diversity of liquidity and liquidity pools creates the diversity for capturing fees and capturing volume. And so with more places to put the coins besides the actual sell button or into the liquidity pool, and like more places to place them in terms of providing liquidity, decreases the amount of coins that need to be sold, because you can utilize them to get passive income on the side, or a nice steady stream of income on the side. And the higher valuation of those tokens, the bigger percent of the fees or the higher magnitudes of fees that you get. And so, and especially if other protocols that aren't liquidity tokens support hex in some ways to unlock fees, or even this is actually a better way, taking the coins like the Mintras and the Power Cities and stuff, and then using your tokens and pairing them with theirs to unlock the volume that comes from their little ecosystem, to unlock the fees that are generated from the volume of their ecosystem. To me, that seems like a more favorable place to be than just dumping your tokens from my perspective. But at the very least, having all of these different things built on Pulse Chain allows for the opportunity for the money to go somewhere else besides being sold on the chart. Damn it. I think that was, unfortunately, I haven't seen Kareem popping quite yet. He's probably just running a bit late. Is there anything else you want to talk about quickly, Axis? If not, I'm going to pull up my website really quick and just let people know what's going on.
Yeah, man.
Just next weekend.
Take her away.
Yeah. So real quick, guys, I've launched my website. Oops, that's the wrong button. Let me share my screen. So I launched my website, cryptosloth.info. I'll put it in the chat here. And basically, this is kind of me launching two things. One, a newsletter. So where I'll be writing articles every once in a while on stuff that I find interesting. So I wrote this kind of more towards when me and Axis were doing the liquidity courses, when we were forming the content for that. And then this recently is something that I wrote based on one of the slides in my upcoming course. But this newsletter, you can sign up for free. If you just put your email address in, you can get access to that for free. But also, I'm forming a private community as well. So it's a private Telegram community where I do private videos, private streams, direct access to me through Q&A. But also, I'll be doing courses for all of my members in my course. And to launch kind of the inaugural course, it'll be a crypto fundamentals course where I go over my thesis on investing in crypto, kind of how to evaluate projects, tokens, etc., as well as a very, very basic intro to LP, because I think that's really important to understanding crypto, especially in DeFi. And so if you sign up to the pro membership, you'll get access to this course for free. And not only that, but I am giving 50% off discount codes. I'll put that in the chat now. It's Sloth 50, sorry. So first 10 people, oh, sorry, Sloth 75. Sloth 75. So Sloth 75 for 10 people will get 75% off the first month of membership, so 75% off the course. And then I got 50% off discounts for anybody who doesn't get to the 75% ones in the first 10. So if you guys want to be on that course, it'll be next weekend, 10 a.m. to 2 p.m. Saturday, and 10 a.m. to 2 p.m. on Saturday, and 10 a.m. to 2 p.m. on Sunday. It'll be a 2-day live course. So yeah, that is what I am. That's the most recent happenings for the stuff that I've been building, just kind of from a business standpoint. So I'd love to see as many of you guys in there as possible. Cryptosloth.info, and I appreciate anybody's support. Thank you. And really quickly, we have Steve Mayfield with a generous $50 super chat saying, "Good job. Thanks, man. I appreciate that. Thank you a lot." But yeah, I'd love to see as many of you guys in the course as possible. Pick up those discount codes quickly before they run out. And I think it's going to be a good time. I'm excited for it.
Yeah, dude. So we've been seeing some interesting things here with this PDI. Now, I'm going to hold off a little bit in terms of like definitive thing, but look at long before there was some murder mystery, investigation behind what is going on with PDI and Atropa. There was pulse chain sacrifice OGs that was coming to me and saying you should buy just a little bit of PDI just in case.
Yeah. Shout out to Identity Block. He's been talking about that publicly from
Identity
from the beginning.
Block. For sure. And like as soon as the wrap BTC thing happened and Richard made the farm, it totally changed the landscape for how we all saw pulse chain. It changed everything, because like before that, the idea of where was value created and what is value and where does value come from, it has completely changed, because we saw wrap BTC. We saw a forked version of so we saw BTC get wrapped and put on Ethereum and then get forked, and now you have like a fake wrapped Bitcoin that does have value, that makes many multiples and price changes, and then if you can back it with like a system, a piece of code that can incentivize you to bring value to it, it's like it totally changed everything that we understand about where value comes from in crypto. And like ever since then, now, Identity Block, Hexfire.io, Crispy Man, and like others have been like saying things like, well, maybe you want to have just a little bit of this P-Link or this PDI or this, wrap BTC fork or this, Aave or whatever it is, these coins that originated on the ETH chain, and maybe the end game is to bring all of that volume and user interaction to Pulse chain one way or the other, right? And so I think it's very interesting. I think it's definitely created a lot of excitement in the community, and people have made good money on it. And so I just, anything that brings volume and interest, I'm behind that. So, but I just don't have any definitive TA on it yet.
Yeah, so I haven't kept up with that stuff too much myself. I've kind of seen it. In my head, I've classified it more in like the meme coin category of things, where it's like these things kind of pop up and then they die off for a little bit, and they're fun to speculate on, but not something that I put too much attention to. I know there's a lot of analysis, like on-chain analysis, looking at the contract stuff out there, specifically by Dipcatcher. So if you want to dive deeply into that, go onto his Twitter. He's going to give you the best information that's kind of closest to the source from his analysis of the contracts itself. Let me think if there's anything. The stuff that was happening with the wrap BTC was always really interesting because, and this is a theory I heard from somebody that I liked a lot, and it was like, so there are only so many wrapped Bitcoins on Ethereum, right? Which means there are only so many that got forked over to Pulse chain. And that number is less than the total supply of Bitcoin, because not every single Bitcoin is wrapped and put onto Ethereum. So the number of holders that hold wrapped Bitcoin was way, way, way smaller than a lot of other assets. And no other wrapped Bitcoin on Pulse chain could exist, because you can't create it with Bitcoin the same way you can on Ethereum by wrapping it and putting it on Ethereum. So it created this environment. It's kind of like the Pulse Doge thesis, where you just create this really, really scarce token in the hands of a very few number of people. And presumably, like Richard Hart is somebody who owns a lot of Bitcoin and can put a lot onto the Ethereum to have a lot of this forked copy when it comes over. And so because of that, it would be really, really easy to pump it up to match it with the Bitcoin price. And then if you put a liquidity pool with it that's actually backed by Bitcoin, you say, look, you get this free copy of your Bitcoin that's worth the same as a Bitcoin, and it's actually backed by Bitcoin through the liquidity pools, with it being paired with the bridged in wrapped Bitcoin, right? And that could have been actually, in my opinion, a really, really funny and cool thing to see if it was able to be pulled off. I don't know if that was his actual goal, but that was like a possible outcome of basically of the setup that we were seeing, and especially when you open that pool at the beginning.
Yeah, so I'm just looking at on the chain right now. There's like 40% of the supply is sitting in the top like 25 wallets, something like that.
Mm-hmm.
And there's a total of 154,000 wrap BTC out there. And so I would, if you continue, like here's some signal is like if you continue to see consolidation of Bitcoins into like single addresses, that could be a good sign that there is a class of pulse chain users that's absorbing that supply up and they're trying to consolidate it. And then, they're going to probably be smart about it and then spread it amongst multiple addresses to make you think that's not what's happening at the same time. So, it's, PvP out here.
Yep. That was a wild time when all those farms were popping up. We got like the Pepe farm. What else do we get? We got a Chainlink farm too. Yeah, remember that? Yeah, that was fun. I was wondering like what's going on here. It's madness, but
yeah, it was fun getting to like uncover all that and kind of see, kind of the game plan as it was laid out. And I don't think it's over. I think there's plenty more other tricks up the sleeve of the devs that haven't even been launched yet.
Yeah. And also, we haven't touched on this as much, but there's a whole like mini DeFi season that could potentially happen in Pulse Chain with all these different dApps going live. So for like all we have gotten really right now is PHUX. That's the main dApp that's come live. Paydius has been a big one too, but Liquid Loans, Power City, Mintra, even Fiat, Famous, like there are a bunch of dApps that ran sacrifices that we haven't had launched yet. And so that's going to be another big point of probably a decent volume based on speculation of these tokens, and will probably breathe a little bit of life into the system as we're actually getting the promises that were made years ago come to fruition. My opinion right now is they're probably just holding off because everyone sees all the uncertainty and instability in the market. And so especially for the leverage ones like Liquid Loans, Earn, and Famous, you don't want to launch a leverage platform where prices tanking and people just automatically getting liquidated the second that they use it. That's not really good marketing. So I imagine they're probably waiting for like a confirmed bottom to be able to get a lot of this stuff out. So it's a little bit safer and it doesn't look as bad for them,
Mm-hmm. Yep, I would anticipate like you're saying a bunch of the big heavy hitters still aren't even on the chain yet, and that's going to be exciting. You start seeing that these big projects start launching, and then you start seeing me and Silver the Antidote going live again. It's time to get excited.
Yeah, I'm excited when we start seeing Silver talk again, because I know once he's getting excited, I know it's time to get excited. Once he starts getting to work, I'm like, oh baby, it's coming back. Oh man. All right, man. Well, anything else you want to talk about? Anything else you want to touch on? We've gone for a solid hour.
So. Yeah, we did a good stream. It's been a long time coming.
Yeah. Sorry,
appreciate
guys.
all you guys in the chat for being here, man. It's been a while, but we're back. We came back. We came hard and fast. So I hope you guys enjoyed it. Lots of developments if you're paying attention on Twitter. Can't wait I got a busy week this week with creating content, and I'll be live like 2 or 3 more times. So keep your eyes peeled on Twitter for some future stream links. All right.
Hell yeah. And
whatever happened to Kareem? He was supposed to be here.
Maybe we'll get him next time. But yeah, sorry about that, guys, that he wasn't able to show. But that's all right. I'm sure he's got something going on, and maybe we'll try to get him for the next one. Yeah. Oh man. But yeah, cryptosloth.info for me. I forgot to mention the courses will be recorded, so if you can't make it live, you can get the recording afterwards. But thanks for watching, everybody. I really appreciate it. I think we covered some good ground. And surprisingly, Axis, there's a lot to talk about amongst all the doom and gloom and the red candles, which makes me hopeful when things go up.
That's where all the opportunities at.
Yep. Oh man. All right, buddy. Well,
appreciate you.
I think that's it. Thank you, everybody. Alex, Axis, thanks for coming on, man. It's good talking to you again live. I always have a good time.
All right, y'all. Peace.
Peace.